Guys, it's ViniFX right here, and this is still a London session. The time right now is 11:47 a.m. and around 1 o'clock, to 1:30, we'll have a lap of London plus New York session. All right. So I made a video last time. I explained a few things about the market, but understand very well what I was explaining. So today I want to make it much more easier to understand. All right, much more easier. And I'll be teaching market structure today. Market structure, that is one of the important things you must learn if you must trade the financial market. Market structure is one of the pillars of your understanding, one of the pillars that will help you to make money in this market. Help you, all right? Market, don't joke with market structure. It's very, very important. Okay? All right. Come to the chart now. Okay, guys. I think you can see the screen right now. We have to manage it. Okay? Until I get a better camera setup that will make this easier. Right now, I believe you can, and I believe you can see it. Okay, so I want to teach you what is called market structure. Okay, looking at my computer right now, this is a chart. And right now, I am on the 15 minutes time frame. If you look at here, right here, this is WD 4H, 1H, 15M, 5M. So this is weekly, this is daily, this is 4 hours, 1 hour. 15 minutes and 5 minutes, and right now I am on the GBP USD time frame pay. Okay, GB USD pay. Okay, and this is the chart. If I click here, I'll be on the CHF JPY chart, but this is the GBP USD chart. Okay, so we'll use this GBP USD to do the the teaching for you to understand market structure. Market structure is one of the pillars of this for you to understand the chart. It helps you to take a trade and to make money. You must know market structure. It is super important. It is one of the first things you should know, so that when looking at a chart, market structure helps you to even determine the trade. The trend helps you to take a trade, and it helps you to make the money you need. It is the first knowledge you need before every other one. I must be honest with you. Don't be deceived, guys. I'm telling you something you need. It will make things easier for you on the long run, knowing market structure. Okay, so right now, to not waste your time, right now let me go to the daily time frame. Okay, this is the daily time frame. Okay, so I've got to the daily time frame. I'm going to the daily time frame. Okay, the chart right now is the daily time frame, and this is the chart for daily time frame. Okay, so I'm already seeing market structure here. So I, being a trader, if you ask me, this is an uptrend. This right now is an uptrend from this point. Okay, from this point, move up to all here right now. Is an uptrend, but right now, understanding market structure, I think and I can see that the market is starting to change to a downtrend. Okay, all right, this is an uptrend right now, as I just marked out in the box. Is an uptrend, and that being said, this right here also is a downtrend. Okay, and what is an uptrend? An uptrend is a trend that is known for creating higher highs and higher lows. An uptrend is a trend that is known for creating higher highs and higher lows. Let me give you a quick example of that. Higher highs and higher lows is this place, this point right now my mouse is at. This is a low. Take it up. This is a high. This is another low. Okay, you understand? As simple as that, guys. This is a high, this is a low, up here is another high, down here is another low, up here is another high, down here is another low, up here is another high, down here is another low, and up here is another high. Okay, so this is an uptrend because it is making higher highs and higher lows. This is a low. This point right now is a low. This is a high. This is another low. This low is higher than this low, so it's a higher low. This is a high. The next high, which is here, the next high, which is right here now, is higher than this high. Okay, so it's called a higher high. The next low, which is this low, is still also higher than this previous low, even higher than this first one, higher low. So it's making continuous higher highs and higher lows. That is an uptrend. Okay, we'll still go to that when doing this is market structure, but I will take it on a more clearer part, so you can understand very well. And also for the downtrend that I marked out before, I said that this is a downtrend. Okay, imagine now, listen to see the difference between a downtrend and an uptrend. So we have done uptrend. This is now a downtrend. So for this downtrend, this is a high. Okay, this is a low. This is another high. This is another low, another high. Okay, then another low. Okay, so this is a high, this is a low, this is a high again, this is a low. You can see that this high, okay, is higher than this one, so it's called a higher low. A downtrend makes higher lows, higher lows. A downtrend is making higher lows, higher lows. It's making higher lows, higher lows. A downtrend is making higher lows, higher lows, higher lows, and lower lows. A downtrend is making higher lows and lower lows. Okay, while an uptrend is making higher highs and higher lows. Okay, an uptrend is making higher highs. An uptrend is making higher highs and higher lows. A downtrend is making higher lows and lower lows. This is a high. This is a low right here. This is another high. This is a lower low. This low is now lower than this first low. The next low again, which is here, is lower again than this second low, giving you lower lows. A downtrend continues to print higher lows and lower lows. It's going down. This is a high, this is a low. Okay, and then this is a high, this is a high, this is a high. You can see that the new highs are even lower in high than the previous high. It's called higher low. It is not higher high, it's higher low. That gives you a downtrend. Okay, guys, that gives you, even right here, if you can see again on this chart, starting from here, mark it this way and go up this way, down to up to this point, up to this point. Okay, this right now that I boxed out, I marked out, I marked out rather, is an uptrend. It's a clear, beautiful uptrend. Now let's mark it out using market structure knowledge. Okay, it's an uptrend. And why is it an uptrend? Looking at it, I already know it's an uptrend because I'm a trader. I've learned this, I know this, and I'm telling you it is what? An uptrend. Now look at it to save your time. This right here. Okay, this is an uptrend. I've marked it out. So this right here, okay, this is a low, this is a high, this is a higher low, a higher low. An uptrend makes higher highs and what? Higher lows. An uptrend makes higher highs and higher lows. An uptrend makes higher highs and higher lows. Okay, so I've marked the low, the high, the higher low. From right here, then it gives you this to this point. This is a higher high. You see that this high right now, this new high right now is a higher than the previous high. So it is a higher high, and then it comes down to this same high now, comes down to give you a new low. But this low is what? Higher in low than this previous low. Higher highs and the higher lows. That's what it says here for an uptrend. These higher highs and higher lows is for an uptrend. Okay? Higher highs and higher lows is for what? An uptrend. For an uptrend. Higher highs and higher lows is for an uptrend. Uptrend. An uptrend. Okay? Higher highs and higher lows. Now, you can see it gave you a high here, gave you a low here, and then gave you another high, and then this high gave you this low. Remember, all the new highs it's giving you will always be higher than the previous high, and the new lows will always be higher in low than the previous low. That makes it an uptrend. Okay, now this one goes up here to give you this high, comes down here, okay, to give you this low, goes up again to give you this high. Do you see it, guys? And then it comes down, way down. It comes way down, okay, clearing out these two lows. It cleared out these two lows. But before it could do this, before it did this, you can see that the market was printing a pattern of a downtrend right here. Starting from right this spot now to this spot, to this high here, the market was giving you a character of a downtrend. Okay, remember the main trend we've been marking out was an uptrend, but right here something happened. Something happened with the market right here. Something happened right here. What happened right here? Remember, the market started off as an uptrend, which is the main trend. Okay, we are still in daily time frame, all right, which is the main trend. Understand that? And then this market was giving higher highs and higher lows, but at this spot it gave a higher high, and then from this spot right now, from this up right now, the market came down. Okay, it gave you a low, it sold to give you a low, gave you a high. Okay, and then, excuse me, okay, market from here is sold this way. Okay, it sold to this spot, gave you a high, gave you a low. Okay, it gave you a low, is here, gave you this low, and this, from this low it bought up to give you this high. Okay, lower lows and the higher lows and lower lows, an uptrend within the main uptrend. A downtrend within the main uptrend. You must watch out. If you know market structure, the market cannot trap you in here. Remember, the main trend is an uptrend, but market came right here and played out a downtrend pattern, a downtrend market structure. Okay, it gave you this higher low, and then came down this way to give you this lower low, give you another higher low, and then another what? Lower low. So for those of you that trade the SMC, okay, the market changed character right here. Hence the market broke this higher low from the uptrend. This was where it changed what? Character. It changed character right here. Okay, but remember, this is on a what? A daily time frame. On a daily time frame, the market, although it sold from this spot, the market sold from this spot, and then it came down here, and continued with its uptrend, continued up again with its uptrend, going back to the trend it was before. Okay, this is a low now, this is a high, This is a higher low. Okay, this is a higher high, a higher low again, another higher high, a higher low, a higher high, a higher low, and then a higher high. As I got to this higher high, the market's changed to a downtrend. From this spot going down is a downtrend, and for those that trade SMC, the market changed character from this spot. Mark it out. It's changing character here. Some people would like to wait for the market to break below this line. This line. This was the previous low it made. Remember, if this market wants to continue its uptrend, okay, it's supposed to give you a higher low, which means the new low it will give you isn't supposed to break below this. The market, it can decide to give you a higher low or come down to this same low level to give you an equal low, which means a low happened here, another low happened right at that same level to continue buying. But at this instance, the market didn't continue buying from this same level. Okay, the market played around, a little noise right here because people are seeing this, and noise was here, but the market was on a mission. It broke down and then it changed to a downtrend. Okay, it changed to a downtrend. It turned down, to the downside a little, and then continued on its uptrend again. You must know market structure to be able to understand these things. So what is market structure, guys? I've been explaining it since. Everything that I've been saying since, it is called market structure. So let's take it again for you to understand it better. Okay, let's do it again. Let's find a clean chart. This is market structure, guys. It's not that hard. It's very, very simple. So let's move down to the 4 hours time frame. We have been on daily since. Let's go to the 4 hours time frame now. It's loading. God, the network is bad. Okay, guys, we are now on the same GBP USD, but right now on the 4 hours time frame. Okay, you can see it. 4 hours time frame. Focus. GBP USD and on 4 hours time frame. This camera should focus, please. So this is a pay GBP USD. Okay, so we are still on the chart. I want to also re-emphasize on the same topic, the market structure. I want to give you more examples. So what we've been doing since is market structure. Please learn it. It's very, very important. So this is the chart. I'm just scrolling on the chart, bringing out more and more charts. It's loading up. Okay, so let's start doing something now, guys. Let's start doing something. Okay, let's start doing something. You see this chart? Look at this chart. Okay, look at this chart from right here. You see, from this okay, let's use here. Okay, from this spot, from here, I just put a line right there now. From this spot, coming down all the way down, going down. I'm scrolling it, pushing to the left, going and bringing out more charts from the right. From there, going more and more down, scrolling down. Okay, to this spot. From there to this spot, it is all a downtrend. From this spot, seeing this line right here, right? Coming down to here, to the next line that I placed there, this line, it is all a downtrend. This is what I'm seeing on the chart. And from this spot right now, from this line, from this very line, you're seeing this line. From this line, okay, from that line, okay, moving ahead to here right now, so I can see it, to here right now, to this place, to this point, is a clear uptrend. Okay, so this part is a downtrend starting from the first line that I placed there. If you can see it, I see that the chart has been on a downward slope. with your naked eyes, if you can look at it, I can be able to identify that this chart has been on a downward slope. And with my market structure knowledge, I realize that this chart has been on a downtrend. All right, and then the same thing applies here also. Looking at this chart from this line right here up to this place, to this point, this market has been on a clear uptrend. Okay, with I know market structure, I'm able to determine that this chart right now is on what? On an uptrend. So let us interpret the market structure right here. Okay, so I took my path to right there, and this, and now here we go. Okay guys, look at it. Okay, 1 minute. Yep. Okay, so let's mark it out. Okay, let's mark it out again with a different pattern. This is the low in this chart. This is the low. We'll mark it out with a line. This is the low. So this low you are seeing right here, from this low, the market bought up to give you this high. Please pay attention. Now we are still doing the same market structure for you to understand. Okay, this is the low. I marked it out. The market gave you this low, and then the market gave you this same low, gave you this high. Okay, and this high we are seeing right here. Okay, that high gave you this low. That high, is sold down to give you this low. To give you this low. Okay, and then this low, okay, pushed up to give you a new high. Okay, and then this new high right here, right now, okay, it's the chart sold, the market sold to give you this new low. So from what I've been saying since, this is a low, this is a high, again this is a low, this is a high, this is a higher low, this is a higher high, this now, okay, is a higher low. So after a higher low, the next thing that comes on board should be a higher high. It's simple, guys, don't make it hard. This is a higher high. Then after a higher high, the next thing that comes on board should be a what? A higher low. And below and here it is, behold, this is a higher low. Okay, and after a higher low, the next thing that comes on board is what? A higher high, another higher high, guys. And after a higher high, the next thing that comes on board is what? Another higher low. You can see it, guys. And after a higher low, the next thing that comes on board is a what? The market buys up to give you a very sweet high right here. A sweet high gives you what? This high right here. Okay, and after this high, the market sold from here to give you this low. This low now is a higher low. You can see that this low is higher than this low. This low is higher than this low. This low is higher than this low. This low is still higher than this low. And this same low right here, guys, is still higher than this low. Okay? Higher lows. That is the characteristic of an uptrend. And up here too, this is a high. This high right here is higher than this high. The new high the market gave you, or this shouldn't be here. We have to use this one, guys. The new high the market gave you is still higher than this one. Okay, even the new high again is still higher than this one. And the new high that the market will give you is still higher than the previous high. Okay, and this high and this new high right now give you another low. And this new low now pushed up to give you what? A new higher high. And this higher high sold a little to give you a new higher low again. And what is next, guys? Right now, what is next? Right here, what is next? What are you seeing next? You are seeing a higher high, guys. Of course, you're learning it. You are seeing a new higher high. You are seeing a new higher high. A new what? A new higher high. And the market came again to give you a character of a downtrend before it continued to the upside. Right, this box I marked out if you interpret this, knowing market structure, this is a downtrend. Okay, and the one that follows from right here also is what? An uptrend right here. And the next one that follows, if you are learning what I'm teaching you, the next one that follows here now, you should know guys, that this is a downtrend again, knowing the market structure that I've been saying since. Okay, let's mark out this one now. It's a downtrend right here. This is the last high the market did. This is the last high the market did. It came here and gave you this low. Okay, it's so tiny, like it's hard. There's a name we call this. Okay, we have a name for this. We have something we call impulse and the correction in the market. We have something we call impulse, impulsive movement, impulsive movement, and then we have correctional movement. Okay, please don't joke with this. Do not joke with this. What I'm teaching you, don't joke with it. Make sure you learn it again and again. It's very, very important. So we have impulsive movement, and then we have correctional movement. Impulsive movement is one of the, they are always fast. They print, healthy candles. It can print healthy candles, extend up or extend down faster, gives you money quickly. Okay, it plays out faster. It doesn't take time. Okay, it's a good market condition, high liquidity, high volatility. It is good, but correctional movement is slow with choppy candles. Let me show you an example on the chart. Look at here. This is an impulsive movement. This example on the chart now, from this spot to this spot is what? An impulsive movement, guys. An impulsive movement. And from here down to here, guys, is a correctional movement. And from here down to here is another impulsive movement. And from here down to here is a correctional movement. And from here way up to this spot, guys, is an impulsive movement. And from here down to here is correctional. And from here up to here is what? Impulsive again. And here down to here is correctional. And here is impulsive. And here is correctional. And here is impulsive. And it continues. Okay, let's mark it out, guys. Let's mark it out. This is impulsive. This is impulsive. This is an impulsive. This is impulsive. Impulsive. Okay. This is impulsive. This is also impulsive. This here is impulse. Oh. This here is another impulsive. Okay, and this here is another impulsive. Okay, this is another impulsive. And this here too is another impulsive. And this here also is another impulsive. That's correct, guys. And then this also, this is correctional. You will see the difference right now. This is correctional movement. Correctional. This is a correctional movement. Okay, guys, this is correctional. This also is correctional. Here is correctional. Here also is correctional. Here also is correctional. And this is also a correction. This little one here is a correctional. inside here. Here is a correctional. Down here is a correctional. Here is a correctional. Here is a correctional. So this is impulse. This is impulse. This is correctional. Impulse, correctional, impulse, correctional, impulse, little correctional, a healthy impulse, and a little correctional. You can see, guys, when there's an impulse in the market, there are always healthy candles. You can see healthy candles right here. The candles are healthy. The market plays out fast, like it plays out fast. Look at this impulse, okay? Look at this impulse from this spot up to here, okay? The market give you what the market printed out. It printed out healthy candles. Like just look at it, guys. You see this? The market printed out healthy candles. If you entered for a buy at this spot, if you took a buy position at this spot, okay? At this spot, enter for a buy. Set your stop loss below the recent higher low, okay, and extend your TP level. You take profit up to this spot. Look at it, guys. Look at it. This should have been a sweet trade if you had caught it, okay. And then let's see. Let's watch out. Let's measure how many hours it took for this to happen. Okay, this took up to 6 days. Okay, these are for swing traders. Up to 6 days. And let's measure out this one. Imagine this one took up to 7 days. This is a correctional movement. It took 7 days and even 4 hours. All of this shoppiness, all of these shoppy candles right here for this correctional move, it took 7 days. But this impulse, look at the. There are healthy candles here, but these candles here are choppy. And this even took 6 days to play out, but these took 7 days and they even play out. So it's always choppy on correctional, but the impulse is the nice movement we are looking for. You can still trade the correctional, but the impulse is way much faster, way much better. Gives you what you want, gives you response faster, gives you your profit faster, or gives you your loss faster, and then you're good. Okay? And the impulse is what gives you the new higher high, while the correctional gives you the new higher low. Okay, guys? So this is the market structure we are looking for. And then how do you use this to take a trade? If you're a trader, how do you use market structure to take a trade? Let's clear this out. I've explained this to you. I believe you learned something right here. Now, how do you use this to take a trade and make money? Okay, remember there are also several things you can still learn on this market. This is one of it. Market structure is one of the things you will learn in this forex industry. There are still many more things to learn, but this is super important. Take your time, watch this video again, and please don't forget to subscribe to this video and then like this video, please. If you are getting value from this video, like this video. Please click the like button right now and subscribe to this channel so that you can see more useful videos when I make them again. So if you're a trader, okay, you are learning how to trade, and then now you have gained a knowledge of market structure. How do you trade with it? How do you trade with it? Let's assume that this market, from this part. Let's assume that from this part, okay? Let's assume that this market has not, from this part, okay? That this part has not happened. Let's just assume that this part has not happened. Let's assume that this part has not happened. Let's assume that this part has not happened. Okay, that the market is just printing out this way. The market is just printing out this way. You're just seeing this. You wake up in the morning, or maybe in the midday, or in the morning, or in the afternoon, London session or New York session, and you are seeing the chart. The market has done this. It has gone this low, come up this high, gone this higher low, gave you this higher high, gave you this higher low. Okay, and then it tries to buy more, to give you a higher high right here, but it failed to still give you a higher low. Remember, a market structure mustn't play perfectly. It mustn't play out perfectly. Sometimes there must be confusions. That is why you must pay attention. That is why you must learn. Even though this market is an uptrend, which is supposed to be giving you higher highs and higher lows, but right here, it gave you a low first, gave you a high, a higher low, a higher high, and a higher low. Yes, it's supposed to give you a new higher low starting from here to come to this level, showing that yes, it has taken out this previous high, but the market didn't come here at once. It gets here, okay, it sold a little, came up again, still sold. Remember, the main low right here we have is this low. So even though the market didn't come to give you a new higher high as you were expecting, the market still did not break its lower low. It is still printing a perfect low, higher low. Rather, it is still, even though it didn't come to give you a higher high from this spot as you'd be expecting if you're a trader, that doesn't matter. Let the market do its thing. Let the market act, and then you react. The market didn't give you a higher high as you might be expecting, but even at that, the market still maintains giving you or printing out higher lows, which makes you to be sure that yes, we are still in an uptrend. And in an uptrend, only be buying. 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 Okay, but you must buy from a reasonable level. A support level. It should be a support level. A support level. I will still teach you about that. A support level, a higher low. Okay, guys. So we are in an uptrend. Okay, and in an uptrend, only be buying. You will only be buying an uptrend. But before you buy, you must ensure you are buying from a reasonable level. It can be a support level or a higher low. As I'm teaching you right now, I told you that this is a low, this is a higher low, a higher low, a higher low. Okay, now this market gave you a higher low right here and then came up to give you a higher high right here. Okay, and then it gave you this higher low. This low is higher than this low. Now that the market has given you a higher low, you now wait a little. If you see a blue candle come up, like example right here, if you see a blue candle come up like this one, this blue candle, this one right now, it comes up, you can take your buy. Place your buy because you are buying from a good level. Place your buy, okay? Place your buy, and then set your stop loss just below that higher low. Okay, and then extend your TP, your take profit level. Extend it to be higher than a little higher than the previous higher high, like this. Where is that? Okay, guys. So if you seeing this new higher low, okay, creating, and then you see that the new higher low has ended, and it didn't come to take out this previous higher low. It didn't take it out, and then you will see that blue candles are coming. Healthy blue candles are coming up. See the first one, this little one, and then the second one is is sizable enough. Come on, man! You should just put your place your buy position. Okay, then set your stop loss. Tighten your stop loss. Set it to the pips you want it to be. Maybe although we are on the higher time frame, that's why the pips count are many here. I'm seeing 127 pips. Sometimes too much for a day trader. Maybe not bad for a swing trader. So going on, guys. Then you do it this way, and then you extend your TP level to be a little above the recent higher high. Okay, this is a trade, guys. Allow it to play out. Okay, allow the market to do its thing. Went up, little down, and gave you a lot of money. So this is it, guys. Please watch the video over and over again to understand everything that I've taught you. It is still me, ViniFX. Please subscribe to this channel, like, and if you have any concern, write on the comment section. I will be glad to teach you more. Okay, bye bye. Have a nice day. So, that is the knowledge, the teaching on market structure. I've explained it very well. So if you didn't understand very well, try to watch the video again and again. It's important you learn that and know it as long as you want to trade the financial market. Be it any forex, maybe commodities, anyone. Market structure is very important that you know it. So I'm ViniFX. Please subscribe to this channel.